you look at historical data, stocks over time provide the highest rate of return. The reason that stocks do yield a higher return is there is higher risk. There's much more volatility than other asset classes. It goes up, it also goes down. Sometimes it goes down very fast, sometimes it goes up very fast. Yeah, hi, I'm James B. Stewart. I'm a columnist and reporter at the New York Times. I've been a business and financial journalist for many, many years. I've been investing for at least 40 years. There has never been a 20-year period in history when stocks went down. That's through World War II, the Great Recession. That has remained true, and so I don't think it's likely to change. You have to be ready to kind of ride through some of these turbulent periods when you own stock and just keep to the faith that over a long period of time, they're going to go up. I think the biggest lessons I learned over that time period really did come in the periods of great stress in the market. I've lived through what I would call 4 stock market crashes. Now, I've lived through some great bull markets as well, including the longest one in history that just came to an end. I don't think you learn so much in bull markets. You just learn, I'm going to go look at my portfolio. Great, it's up. But when times are bad, I think you learned a lot. And that's when I've learned my most important lessons. And the first was in 1987. And I panicked and I sold all of my stock holdings. And, as so often happens, I ended up selling near the low point. The oldest rule in investing is buy low, sell high. And yet, astonishingly, people do the opposite. They buy high and they sell low. And that's because the fear of loss is very profound. So I did make a firm rule at that point, never sell in a panic. What I would recommend to everyone is you have to have a plan. And if you don't have a plan, then your emotions are going to take over. They are going to rule what you do. Trust me, I've been there, I've done it. It may be that some people also have to live through this experience for it to really drive home, but get a plan that you set at a time when things are calm and you can really rationally decide how much money can I put at risk, what can I afford to have in the market, and then stick to the plan. I've always believed in keeping a healthy percentage of my money in stock. Money that, by the way, I don't need because it does fluctuate. You should never be investing in stocks, money that say you're going to use as a down payment for a house, you're going to use to pay for college. For young people, it's such a powerful way to save because over the long period of time that you can be in the market, the compounded rates of return are really high. So I've been a big believer in stocks, and I have been investing now for over 40 years in the stock market.